Hi, I'm Bill McLaughlin, editor-in-chief of Furniture Today. Welcome to our Las Vegas news desk. My guest today is Danielle Vincent with TD Retail Card Services. Danielle, welcome. Thank you for taking the time today.
Thank you for having me, Bill.
From TD's perspective, you guys have a really good pulse on retail and how things are performing. How did the fourth quarter look? I know there was a lot of concern as we were heading into the fourth quarter. Were things going to start to turn up? Were they going to, So from your perspective, how did the fourth quarter turn out at retail? What was your sense of how things were going?
Yeah, great question, Bill. As expected. So in terms of, definitely lower than last year. But the big thing for us is that this type of landscape really requires us to build and continue to have strong relationships with our retailers. So increased communication during this time was a plus and was something that the team did. And that's really what we're focusing on, is making sure that we're collaborating with our partners, all of our furniture retailers, and becoming really an essential part of their team. So it was as expected, tougher than last year, but as they kind of say it in these times, the communication really matters. And that's where we really kind of played our chips.
Terrific. All throughout 2023, interest rates were a real factor in the consumer finance space, and rising interest rates never make it easier in your business. What was your sense of the impact of interest rates on the business last year? And then secondarily, what's your sense of where we're going to head with interest rates in 24?
Yeah, so lots of shifting. So you really kind of saw retailers move away from that longer term financing. The rates, stayed, high, and started moving into, more the shorter duration. But what I'll tell you is keeping financing in the mix is definitely something that we saw as, being important, and retailers that were really kind of succeeding, in the space were able to maybe, put other financing plans from the toolbox, in place. So that shorter term, we saw that. We do anticipate rates to kind of carry on throughout 24, so probably a little bit more the same. The Fed, I don't have a crystal ball, or I'd probably be in a different position, but they will come down. Our anticipation is probably, near the end of the year. But what we're doing is kind of, as I stated, is making sure we're staying in lockstep. How do we help our retailers with different financing options, that they can offer? Now, consumers want flexibility, so they do like, that price flexibility with the longer term plans. But I think a lot of retailers are starting to try and combine them with different offers or promotions that they have. And we find that that's working well. So the theme continues: staying in lockstep, being integral, extension of their team. And I think the other thing to add too is, the consumers that have financing, with them, how do we help our retailers drive them, back into the store or back online? And that's where we're focusing as well.
How can you help do that? Can you give me an example of a way that you can help a retailer to drive people back into the store? Because foot traffic is such a critical issue today for furniture retailers.
Yeah, so we're sharing data. So like I said, the teams are really working together, and looking at, what do we know from a financing perspective, and how can they leverage that to help drive in a consumer? What is the next purchase, going to be for somebody, who bought, let's say, an ottoman. So we're really kind of working with them to look at the data that we have in house, and, looking at what they know about their business, and marrying that together. And loyalty is truly an important play. And loyalty is a little different than it was, before. It really is that last interaction that you've had with your consumer. How did they feel? And you want that to be, a great experience. And I think that's where we're focusing too, is how do we help improve that customer experience and make it easy to do business. And that's really what's going to help push 2024 and be successful.
So you mentioned being able to share with retailers what you
Yep.
know. So from what you know, and let's preface this by saying nobody has a perfect crystal ball,
Right.
but from what you know, as you look out into 2024, what's your sense of how the year will play out in terms of the recovery of retail sales momentum?
Yeah, so I think it'll play out probably pretty similar, Bill, to 2023. So I think we're still going to have, some fluctuation here with, consumers and foot traffic, as you mentioned. I think that's still going to be a challenge, but I think what's really going to continue is the importance of making sure you keep financing in the consideration set. It's important that in there, it just might not be the same as it was in years past. But I think it's going to play out pretty similar to 23. The housing market, you're still going to see some pressure there. But like I said, we're liking the relationships that we have with our retailers, and we know we have to, keep having those conversations.
Well, thanks for sharing your insight with us and for taking the time today. Really appreciate it.
Thanks for having me.
I'm Bill McLaughlin, wishing you a good market.